Why did you decide to build on top of Bitcoin first?
I'm going to give you, do I want a Michael Saylor type of answers? Because he's the king. I want I think my answer as an economist, remember, I heard a lot of teams when they talk about this, they say, oh, I want more transactions. We need more transactions so that you actually can give more money. In fact, this is not how you start economics, in my view. In my view, you start what value add you're trying to present to the users. And the way we're starting to think about it is not because it's the king. Actually, it is the king, and I love the infrastructure, and I spend a lot of time on it. And we didn't have to introduce. Actually, I was an engineer before I became a finance prof. I was an electrical engineer in the past, working on code in assembly line. And we may get to this at some point, how things come back always full in circle. That's why I kind of believe much in the technology of Bitcoin first. The reason is, what is the main holders of Bitcoin right now? Bitcoin, everybody so far thinks it's a digital gold. Okay, good. It's gold. Why? It's good. It's a good store of value. We can keep it. What's the business use? Speculation and leverage. I think you may agree to this. Keep it. It's a passive asset. I hold it. Even the ETF, as soon as they approve it, they tell them, look, there's no yield generation, put it in Coinbase, and don't compete on yield, compete on basis point. It means the idea of using it to generate yield wasn't even there. And anybody who has Bitcoin expect an increase in price, and they don't want to do anything with it because they worry actually I don't want to convert it and I lose market risk. It makes sense, actually. It means we started from the idea, Camille, of what are the users? And we say the users are different type. There are the whales, there are the small users, there are the miners. Well, how can we create an economy? Because that's not the case actually for Ethereum. Ethereum is a smart contract language I don't think of Ethereum and Solana as a store of value. I think of Bitcoin as a gold store of value, but there's a beauty of it, it's digital. And because it's digital, that digital word has not been used enough. The gold part has been used enough, and there is good adoption, and many people are holding it, fixed supply, and there are going to be some forking in the future, and future going to make supply even smaller, the relative supply. And we're not going to have a lot of subsidies, and prices may go up, and they just wait. But not everybody has 1,000 Bitcoin. Some people may have half, have one, and they want to have yield on that Bitcoin. And some miners have been hurt so much recently by the FTX and the other things. And they come up to you and they say, well, I want, but I don't want to take risk. Can you find a way to generate sustainable yield? This is actually sometimes how gold differentiates itself, because we talk about the word sustainable. We want sustainable yield in BTC. If you're a miner and you think into, okay, I think this will require less than 30 seconds, but just to give the audience a view. The subsidy of miners, for example, right now is getting smaller and smaller. But in terms of dollars, it's the same. It's almost a little bit increasing because Bitcoin have appreciated in value, and there is, if you convert the subsidy in dollars, actually they are making still okay money. Well, wait a second. If these people believe that the price of BTC is going up, what do they do now? To upgrade their machines, to do anything to their machine, they have to sell the BTCs in order to actually do it. We come into them and say, look, you want to still stay in L1, but probably you can finance your CapEx just by the yield you're going to generate out your BTC, while BTC is still going to be in your L1 for now. And the metric for me later in my phase 1 of the project, because we have phase 0, phase 1, phase 2, we can talk about them. In our phase 1 of the project, my metric is how many of those will finally trust us and move to L2. But I want to tell them that you can still make money in L1. And you don't have to sell your BTC because you're a believer that BTC goes up. Because if they don't believe BTC goes up and the subsidy is going down, how can they finance themselves? It means it's a net margin. It's not going to make enough money. That's why I think for miners, for example, a collateral lending based on smart contract, based on generating yield that is sustainable, and we can chat about how do we generate yield sustainably, makes sense. As small users, how we distinguish ourselves. I don't believe in centralized sequencers. When we start this project, one of the things really interests me the most is the fact that we don't have a central entity in sequencers or all. Even now, even the chain as it's going to go now, phase 0, we already did the implementation of decentralized sequencers. What does that tell you, Camilla? Sorry, what that actually tells you? Tells you that, okay, now you as a locker of Bitcoin, suppose you have one Bitcoin and you decided you want to earn some yield, and you make a choice. Are you risk averse or less risk averse? If you're risk averse, you say, oh, I'm going to stay in L1. I'm going to still lock in one of the sequencer. And by the way, there's not only one sequencer, there are many sequencers. What's that creating? It's creating an open market of sequencers. And that's key. Because if you don't have an open market of sequencers, me as a sequencer, what I'm going to do, I'm going to take a lot of service fees, I'm going to give you little. But because there is a market of sequencers, if I don't pay you enough, the next day you're going to say, I want to be a sequencer myself. And we allow that. We have an open, it's almost like, think about it, like Bitcoin. If you have a laptop, you can connect it anywhere else and you become a miner. In Goat Network, you can be a sequencer if you have a certain level of Bitcoin that is not crazy. It's actually reasonable. You become a sequencer by tomorrow. Now it's whitelisted because the system still need to operate. But in a sense, to a nutshell, again, to summarize just for the one sentence things, we believe in heterogeneity of investors in Bitcoin. Bitcoin is a store of value that is digital. The digital aspect has not been utilized enough. And we think by allowing different heterogeneous investors with different risk aversion, different need to basically operate in the system, this creation of value for those guys are unique to our ecosystem because we are decentralized sequencers for which you can earn gas fees even if you have one Bitcoin, or if you have a 0.1 Bitcoin. If you have 0.1 Bitcoin, now you can earn gas fees in BTC. You don't need to have 1,000 Bitcoin in order to come in and create a sequencer. Because as soon as you log, and I'm telling you, you have a choice. Would you like to be in L1 or would you like to be in L2? If you like to be in L1, it's going to be lower yield because less return. If you want to be in L2, you're going to be, but also there's slashability because if you behave badly, then we slash you and there's fractional slashing. But generally, we believe BTC nature of digital gold allow us to do this market. We believe that the nature of investors are different from the nature of investor in Ethereum. And because of this nature in terms of what type of miners, because they have machines, they have CapEx, they have things, users, they rank from small one to long one. This creation of heterogeneous investors and heterogeneous need create value in our network with lower fees.